How we cashed out $53.6 million in just 3 properties when our initial investment was only $9.3 million. We had an infinite return strategy, and that doesn't even include cash flow. Commercial real estate investing is not for the faint of heart. In over 22 years, MC Companies has been investing in thousands of properties. And with that comes a little bit of pain and a little bit of wisdom. And while we certainly had our challenges in 2023, we had many refinances, some land sales of over $53.6 million. That, of course, did not include cash flow from the time of ownership. We did this with our infinite return strategy, which many of you subscribe to. For those of you who do not, I suggest you continue to watch. So we decided to exit 3 properties for various reasons. As most of you know, I am a cash flow guy. I typically don't sell. We like to hold for the long term for the cash flow and, of course, for the tax benefits. But in 2023, we decided to sell 2 multifamily properties and 1 office building. So for the first property, which was located in Tulsa, Oklahoma, we as a company decided to pull out of Oklahoma entirely. And this was our last exit. Now, when you do a strategy like that, you typically redeploy to another market that's doing better, which is exactly what we did. So here's the history of this property from beginning to end during our ownership. We purchased the property for $13.5 million, and we obtained a loan of $10.8 million, and we put $3 million down. This property was about 250 units, and it cash flowed from day one. This was a value-add property, and we were able to grow the value to $18 million in just a few short years, of which the lender gave us $13.1 million loan to cash out the original loan of $10.8. This equated to a $2.3 million cash out refi. A few years after that, we continued to improve the property to $21 million in value per the appraisal, and the bank, of course, gave us $17.2 million loan, again, for another cash out refinance. So the $17.2 million loan pays off the $13.1 million loan and equates to another $4.1 million cash out refinance. A couple years after that, we grew the value again to $25 million, and we were able to obtain a $19.2 million loan, again, another cash out refinance for another $2 million. At this point, we're well into our infinite return strategy, and we've returned $8.4 million to the investors, which included the original $3 million investment. And then in early 2023, our investment committee decided to go out and see what this property might be worth as we were trying to exit Tulsa, Oklahoma. The broker's opinion of value, or the BOV, came in over $30 million. So we decided to list the property, and it sold in the second quarter of 2023. That equated to a $13 million profit. $32.2 million sale minus the $19.2 loan equates to about $13 million. So on this one property, when you add it all up, we returned $21.4 million in cash out, not including the cash flow during the time of ownership. So property number 2 is a little bit different. It's an office building that we bought where the rents were significantly below market on a major street called Scottsdale Road in Scottsdale, Arizona. So we purchased this property for $3.6 million, all cash. And the reason we didn't put a loan on it is because we had a big value add and we wanted to put a loan on it later instead of having to pay a prepayment penalty when we purchased the property. So in just a couple years, we were able to almost double the value to about $7 million, and we obtained a $4.5 million loan cash out refi. So that was a $2.5 million distribution to the investors at that time. Then, of course, we had the pandemic, and the work from home thing started to pop up on everybody's radar. And I got a little concerned as we started to have a little bit of vacancy in this property. So we immediately listed it about a year ago, and it sold in the first half of 2023 for $9.3 million. I didn't really want to sell this property, but I was concerned about office building vacancy in the future for our investors. And I felt it was better to cash out now, return their equity plus profit, rather than fight the market later. So that sale, the 9.3 minus the 4.5 loan, equated to about $4.8 million, which we distributed to our investors. So this property equated to about a $7.3 million cash out, not including cash flow while we had the property in ownership. Property number 3 came from an unsolicited offer, which happens from time to time, which we decided to move forward on. We settled in on a price of $33.5, but let me walk you through the history of the ownership of this property. We bought the property for $10.9 million, so just $2.7 million down on this property, which cash flowed at the time when we bought it. Just a few years later, another value add, we were able to raise the value to $14 million, and we were able to get a $9.6 million loan, which was our first cash out refi, which equated to about $1.4 million, which we returned to investors. It's important to note that the $1.4 million in distributions was actually a return of equity as opposed to profit. Because don't forget, we had $2.7 million down and we returned 1.4 just 2 years later, leaving a $1.3 million equity balance still owed to the original investors. But shortly after that, we had a nice market run and the value rose to $25 million through a massive value add strategy from our in-house management company. One of our secret sauces at MC Companies is our management company. So here we focused on raising rents, tightening vacancy, and of course, expense control to grow the net operating income or the value as high as we could possibly get it. For all that work, the bank gave us an appraisal at $25 million and a loan of $20.1 million for another cash out refinance of $10.5 million. At this point, created an infinite return for all of our investors, plus a significant profit, all tax-free, because don't forget, cash out refinances are tax-free because debt is actually owed still. So a cash out refi, just like in your home, is tax-free. As I said earlier, some buyer was willing to pay $33.5 million for this property. We decided it was a good deal for our investors. All in, it is a $1.4 million refinance, a $10.5 million refinance, and a $13 million cash out, which equates to $24.9 million in this particular asset. So in summary, you could see on the equity for these three deals, the first one was $3 million down. The second one was $3.6 million with no loan. And the third one, $2.7 million, for a total of $9.3 million in equity raised from our investors. Our cash out on these three assets were $21.4 million, $7.3 million, and $24.9 million for a total of $53.6 million. The craziest thing about all of this, as you guys know, is that I'm a cash flow guy. So these figures don't even include all the cash flow from all these properties over all the years of ownership, or of course, the tax benefits that you get from both depreciation and, of course, cash out refinances. It's important to understand through our infinite return strategy that when we do a cash out refi, the investors still stay in each and every deal. They got us here, and we're going to take them all the way to the end. For those of you guys who want to see all the detail, the rest of the numbers, and of course the time frames, just go to Ken McElroy Pro, and this will be up in the next few weeks.